Delta is a measure of the sensitivity of an option's price to changes in the price of the underlying stock. It is expressed as a number between 0 and 1 for call options, options that give the holder the right to buy the underlying stock, and -1 and 0 for put options, options that give the holder the right to sell the underlying stock. For example, a call option with a delta of 0.5 would be expected to increase in value by 50 cents for every $1 increase in the price of the underlying stock. A put option with a delta of -0.25, on the other hand, would be expected to increase in value by 25 cents for every $1 decrease in the price of the underlying stock. Delta is an important consideration for options traders because it can affect the profitability of a trade and the risk profile of a position. A high delta means that an option's price will change significantly as the price of the underlying stock moves, which can lead to large profits or losses. A low delta, on the other hand, means that an option's price will change only slightly as the price of the underlying stock moves, which can make a position more stable but also potentially less profitable. There are a number of factors that can impact the delta of an option, including the price of the underlying stock, the time until the option expires, and the volatility of the underlying stock. When evaluating an option position, it is important to consider the delta along with the other Greeks, which are statistical measures used to assess the risk and potential return of an option position. Some of the other important Greeks include theta, which measures the time decay of an option, and gamma, which measures the rate of change in the delta of an option. Delta is also important for options sellers, who can use it to assess the risk of a short option position. When selling options, the risk is that the option will be exercised by the holder, resulting in the need to buy or sell the underlying stock at the strike price. The delta of the option can be used to determine the likelihood of the option being exercised, and thus the risk of the position. Overall, delta is an important concept for options traders to understand because it can impact the profitability and risk profile of a trade. Whether you are a trader looking to profit from price movements in the underlying stock or an options seller looking to generate income. If you enjoy our content, don't forget to like the video and subscribe to stay up to date with market news. Thanks for watching, and stay informed.